Hey guys, welcome back to the channel. In this video, we're going to be talking about the second part of our personal finance and really building up to that financial freedom. So this one, we're going to be talking about the next 5 parts of the personal financial, kind of the plan. So number 1, we're going to be looking at borrowing money, guys. Now this does take a little bit of time and consideration when you are borrowing money, whether it's for vehicle loans, whether it's student loans, whether it's personal loans, whether it's mortgages. Make sure I'm saying this, guys, make sure you shop around for everything. Chances are, if you are just going with your first choice, the first choice usually is not the best choice, meaning that you can probably get things a lot lower, including auto loans. If you shop at credit unions, things of that nature, a lot of times you can get a lower rate. Overall, paying a lower rate will allow you to pay less interest and keep more money in your pocket, keeping your payments lower, and also going back to our step number 2, which was paying off this debt, guys. Student loans are kind of broken into a couple different sections. The way that it kind of breaks out is 33% should be from grant scholarships, things of that nature. 33% should be from your parents or savings funds that you've had. And then 33% should essentially come from student loans, meaning that you're not borrowing the entire percentage, 100% with student loans. Now, some of the caveats with that, guys, is we know with President Biden going on right now, some of the student loans are being forgiven. There's some student loan relief. There's a lot of things kind of up in the air with student loans that can be a little bit of a game changer. Personal loans, generally, they are not the best idea unless you're paying an exorbitant amount for credit card debt. Moving it to something that might be, 8%, 10%, 12% versus a 20% or a 30% does make sense. The one thing you do have to be very, very careful about, guys, is taking out personal loans for an extended amount of time. Personally, I don't think you should take a personal loan out more than 36 months. If you're spanning your debt over 5 years, chances are you could probably budget to a much better payment with a much shorter term, giving you a much shorter or a much lower interest rate, which again can make a very big difference. Now, when we look at mortgages and home equities, guys, again, there are hundreds of lenders out there that offer these products. Make sure that you know the ins and outs of it and make sure that you are getting the best for your value. Now, next one we look at, number 2, is your credit score, guys. Credit score is something that you need to be personally monitoring. A lot of people use Credit Karma. Monitor your credit, build your credit. Now, what kind of makes up the credit score, we're going to go into a little bit in a couple of videos that are coming up. But right now, guys, we're just saying the quick kind of dirty basics within the personal finance. So number 1, guys, paying your bills on time. 35% of your score is paying your bills on time. Next 30% is the capacity, which is the amount you have available credit on your credit cards or lines of credit in comparison to what you actually have borrowed. What this says to credit card companies, which do provide the scores, is you're living outside of your means because you're supplementing income with credit card debt, is the way that it has been seen. So if you're looking to build credit or rebuild credit, there are a lot of programs out there. Getting secured cards, which sometimes requires you to put money up front to actually get a card. After a certain amount of time, you can get a card. They give you back the money that you paid or fronted for that secured card. But worst case scenario, you have institutions that are covering their butt because if you don't pay because you have bad credit or bad credit or no credit, they have an opportunity to just offset it and take the money that is in there. Now, the third one is taxes, guys. Always set aside money for taxes. The government will find you. It might be a day, might be a month, might be a year, might be 5 years. Make sure that you have a financial tax accountant. Honestly, as many people that do TurboTax, that do, a lot of the do-it-yourself taxes, you do taxes once a year, guys. What you pay for your taxes is tax deductible. So there's not an incredible need to go out. Even for my tax guy, if I spend $100 or $200, it is well worth it knowing that it is done, knowing I have someone to ask questions. Again, as much as I'd like the TurboTax and things of that nature, I feel like having someone who knows the tax world and the tax laws can make a big difference in getting not only a higher refund, but also looking at deductions and tax breaks that you might not find by yourself. Get professionals, guys, that know what they're doing. Our next one, we always talk about, guys, is paying off the debt. Paying off the debt is super, super important when it comes to the personal finance aspect, because again, the less that you have. So if you're consolidating and paying off debt, once the debt is gone, guys, you have more money for other things in your life. Now, again, strategy we use is saving that 1,000 emergency fund, then paying down your debt in its entirety, then looking at a couple other factors, which again we'll cover in the future, before paying off your mortgage. Your mortgage is actually the last thing you're going to be touching before you are completely debt free. If you're in a very bad debt situation, there are a lot of resources, guys, that are free resources. Again, living in the United States, there are a lot of debt counselors that do this for free, that offer the services that I provide at absolutely no cost to you. Once you start getting to kind of a tipping point with debt, it's very hard to recover without being super strict when it comes to the budget, because if you have too much debt, your monthly liabilities will not be getting fulfilled. You actually don't have enough in that 50, 30, 20 for the debt repayment. You're building debt faster than you can repay it, which is a very, very bad situation. And the final one, guys, that we're going to talk about today is insurance. Now, insurance is a product that I feel like a lot of people kind of overlook. And there's really two things. Is one, God forbid something happens to you, what is the plan? I know it's kind of grim to talk about, but you really have to think about life insurance. I know, again, if you have debt, if you have things of that nature, might not be the biggest priority to think of something like that. But if something happens, that is what is going to protect your family. If you're single, if you don't have much debt, if you don't have many assets, things of that nature, could be a time to pause life insurance. But when you start getting a home, when you start getting cars, when you start having a family, life insurance does come into effect. Again, God forbid anything should happen. Homeowners insurance, auto insurance, guys, search around. Again, these are things that can be shopped by an incredible amount of places, guys, and you can find usually the exact same policy you're currently carrying at a much lower rate with another provider. Now with this, guys, take it with a grain of salt, because you have to be careful when it comes to the provider. Look at the reviews, do your own research on these companies, guys. If they're national companies, if they're large institutions, things of that nature you feel a little more comfortable with, but making sure the solvency of the insurance companies, that they can pay out if claims are there, and also what is the process. Again, insurance, there is a lot of paperwork to it, but you really do need to know what are the ins and outs of the auto insurance, what it does cover, what it does not cover. Same thing with the homeowner's insurance. What does it cover? What does not cover? Making sure, again, that you're protecting your assets. So, all right, guys, so that'll do it for the next 5 steps of our personal finance. This is the part 2 of the continuation video from yesterday. We have one more part that'll be coming up tomorrow, which will be part 3 of, again, the personal finance kind of session that we're doing right now. So guys, again, that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.